Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this review, I decided to review all of our open trades in our ETF investment trader, which only trades index and sector ETFs based on longer-term holding patterns. This is the broader market, S&P 500, starting with this gap reversal here on negative inflation news. This was an igniting bar. This was another, all these igniting bars were inflation, rate hike related. That's what the market's focused on right now. So we've been aggressive here, and I'm going to show you all 13 of our current open positions in this ETF letter for our subscribers, and then we have two new ideas I'm going to share with you also. So this was a big bottoming pattern. On the daily chart here, the blue is the 20, green 50, red 200. And this is my weekly chart over here. I can just click it and make it bigger. So you can see the weekly chart is a massive double bottom with what we call a new low plus. Look, this gapped to new lows and snapped right back, and it has a price void, which is a requirement for every one of our patterns. A price void means on the time frames you're trading, look to the left, and there's insignificant resistance. So when this gapped up here and went sideways, red bar ignored, we bought it right there on this day. We did a half lot, then we added the back half on this pullback here because, we gave it a big stop over here. So this could have grinded lower, in which case we'd get our back half at lower prices. And it continued higher, and then on this particular day, we bought the back half. So that's still an open position. Based on Friday's bullish close, it looks like a magnet to, hopefully the 200 MA there and are extended. And so we got a gap reversal here. We entered this right here on this bullish 1, 2, 3 continuation pattern, added on the pullback, and we are still in that IBB. This is a biotechs, and notice that we watch IBB and also XBI. They're both biotechs, but obviously they have different components. Now notice here, this is a bottoming pattern on XBI. Look at all the flat moving averages, daily, weekly. It's just in a trading range though. It's kind of, you could trade the highs and the lows, but it's pretty much been dead money. So this one was superior. And we bought this one third, so right in here on this little retest, we bought this, and we're in a full open position, and we typically trail our stops unless we're getting close to the target based on the weekly chart. And so on this one, our stop is last week's low, obviously, with this igniting breakout bar in the weekly. IBUY. Bottoming pattern here. We bought it on this professional gap breakout over this red bar, closing breakout. So we bought a half lot there, and then we added last week on that bullish turn there at the 2050 MA. JEPQ. We actually bought this last week. On Wednesday was our breakout over the prior highs, and it's nothing to do on that one. MJ marijuana. This sector, if you go look at a monthly chart, it has tried to bottom so many times. This looked like a bottom. Obviously there was in the news, legislation, whatever the case, and then it didn't go down anymore. So even though this looked like a head and shoulders in a downtrend, it stabilized there, and then we bought it. We actually bought right over the high. This was a closing breakout, and so we bought over the high of that bar, stop under all these lows. It has another beautiful closing breakout last week, and we're just managing it. It has a big target because of the amount that it's fallen over the last months and years. SIL is silver, so using our Techo-Fundamental, when the US dollar started falling here. Here's a Bear Island reversal from a topping pattern, 20 MA rolling over, then interest rate sensitive sectors that propelled commodities, and we entered SIL on this little breakdown failure, red bar, and this is what we call a 3-bar turn. It didn't happen in 1 bar or 2 bars, it happened in 3 bars. Greg likes to say it went down and it went up, and it's a closing breakout. So we entered right there. Stop is last week's low. Observer entered way back here on this double bottom. See, it went down, snapped back, higher low, igniting bar. So we entered right there. Stop is under this pivot. So under the November, well, not November low, but that pivot right there is our current stop. And notice it still has a price void. So on a weekly and daily chart, it still has room to move higher. So we have to let it breathe, go up, and trail pivots until it starts accelerating towards its target. TAN, just got crushed here on the daily. You see climactic on the weekly over here, breakdown failure, wide range bar. This is a beautiful bottoming pattern, and we entered this one on November 9. So we entered it over here on this little stabilization and breakout, and so we got the benefit of this gap up. We've sat through it, and now our stop is last week's low, and our target is up here, so maybe 87, 88, but we'll let the stock take us out just by trailing pivots. This is actually a bullish close, is a gap, wide range engulfing bar. We actually call this a bear sandwich, or wide range bars that engulf an ugly red bar. XHB, big bottoming pattern, tested 3 times, multiple times. The 20 and the 50 curled up. So we bought it on this gap breakout right there. Initial stop was down here. Now our stop is last week's low, which corresponds right here in the 20 MA. Another bottoming pattern. So we entered on this igniting bar right here, gapping over 1, 2, 3, 4, 5 bars, a bullish island reversal. So we bought on that day, stop under here. It's a breakout here on the weekly, as you see. Yeah, it's at the 200, but we're trading along. As long as the weekly it's not at its destination, which, as you can see, this one's not. It has room to run. So we just sit through pullbacks, since the charts are suggesting it's going to churn its way up. And then on the weekly chart, you can see our target, somewhere around 97, 98, these resistance areas over there. Technology, kind of what we call a catch-up trade. So we entered this on Wednesday when Powell was talking and the markets, lit up. Bullishness. Again, the rate hike expectation being lowered. So we entered this one because it has a bigger void than the diamonds, for example. The diamonds have been the strongest, and I mean, look at the weekly chart. It's greater than 100% retracement, and even though it's holding very well, that's a very poor new setup. We've been in since this bar here, the gap breakout over all of this mess. 20, 50 up, big bottoming pattern, price void, and our stop now is last week's low again, but you can see it can churn its way up, and I have a significant void up here to, I don't know, 70, 72, 3, I don't know. We're just in management mode now. So those are all our opens. You can see they're all doing great, have beautiful, huge open unrealized gains. So we have 2 new trade ideas for our subscribers. A big bottoming pattern. This is XLY, the consumer discretionary. Huge bottoming pattern. This got our attention. Bullish gap over a red bar, breakdown failure, retest. So we retest, going sideways, igniting bar. So we're at the top of the range. So we will be entering over Friday's high, stop under this pivot right here from November 21, and you can clearly see the void, big retest bottoming pattern on the weekly with a huge void. ARC F is one of the Kathy Wood's ARC funds, big bottoming pattern, wide range igniting breakout on Wednesday, pretty much 2 consolidation days here. Now this one has not broken out of the long range yet, but it has from this shorter trading range. Weekly is still going sideways. I see that, but let me actually show you this beautiful monthly chart. right here. So this is this was a climactic sell setup. Went sideways. Look at all this indecision. Red, green, red, green, red, green. But this is a price void for a short. So this actually would have been a very, very adequate short right here. Shorting under the green bar, stop over the high, manage in between, and you can see, let's just use round numbers, $50, and you would have trailed all the way till over this green bar, roughly 19. That would have been a home run. So now it's a climactic buy setup, and notice that I have two bottoming tails here that made new lows and didn't go anywhere. So if you were trading this monthly chart, you would be buying over, this is December 4 right now that I'm recording this, so it would be over November's high with a stop under November's low, and target, I don't know, let's just call it 35, just eyeball 50% of that. So you can now see how we're using these multiple time frames to get on board. So with a smaller time frame, you go down, it's like a microscope. We're zeroing in, and that's why we're zeroing in. And Friday's high, we're going to take a position in this, as I mentioned, stop under November 22nd low. Hope that helped. As always, email Greg or me with any questions. Check out the ETF investment trader on our website, mastertrader.com, and this is a great service for using our technical approach for trading ETFs with a longer holding pattern. Good trading all. See you in the next trade review video.